Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Could I please get a screen and audio check? Thanks, Marty. Morning. Morning, Stephen. How we doing? We okay? All right. Thank you. Good morning, everybody. Thanks for visiting the Trader Lab today. I'm your host, Tom B. This stream is about integrating Bookmap order flow tools with auction market theory built on top of a chassis called the volume profile, and it's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. We have some interesting behavior. It is somewhat news-driven. However, the market, as I have mentioned and posted, and I even believe I mentioned yesterday's stream, that when the market, remember how the market operates, market mechanics, the market goes up to go down, and then the market goes down to go up. It's so simple, yet many traders get myopic. They get lopsided in their thinking. And if you're in the day trading mode or business, you always have to be thinking from both sides. And why might the market be going down? Well, other than news, we know that the market is long, it is bullish, and longs in the market will trail their stops under recent lows. When there's a change in sentiment, even if it's short term, those longs become sellers on sell stops, and then you get new sellers coming into the market, and the process continues. This is what Trader Lab is built on, understanding how the market works. And then I share structured trades with you that you can reverse engineer to overlay on top of behavior, which is called context. And if you can identify it, of course, and vet it so you have an edge, you can deploy these structured trades. And over time, even though the outcome of any interaction with the other participants is random, if you have the discipline and a statistical probability that gives you an edge, and as I mentioned, discipline to actually execute and manage your emotional states, you have the opportunity, just like casinos do, to extract the dollars from those other participants. And over time, even though we all take stops, and let's see that for what it really is, well, number one, account protection, but number two, overhead and cost of production, you might have the ability and the potential to actually establish a career and a business of trading. And that is what the Trader Lab is built on, and there's no cost to visit the Bookmap Discord Trader Lab community. Plus, there's a lot of additional education. Stocks, options, crypto, order flow with a high-tier tool like Bookmap. If you're a Bookmap subscriber, there's the Bookmap Academy where you can get mentoring, coaching on using order flow, and also reviews of your actual trade so you can improve. Bookmap is one of the only firms I know that actually invest in its subscribers and even in traders who are not subscribers. I think it says a lot about the Bookmap because it puts traders' innovation and trader development ahead of everything else. We all can maybe have the opportunity to succeed together. And of course, past performance is not indicative of future results. You do need to do the work. We have a 40-point gap today. It is July 17th, 2024, and we'll be talking, 52-point gap, I'm sorry, and we'll be talking about that somewhere in there anyway. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. However, I am regularly active in the Bookmap Discord Trader Lab during the session. Also, I am a full-time trader. So let's go from there. I always like to start with a quick overview of statistics. Now, the thing about statistics is, like everything in this business, it is random. However, the number one driver, at least for me, is the context or condition of the market. Then statistics have a place, but it's not the dominant piece. It is a piece. When you have a tremendous gap like this, the idea, at least for me, of getting long is not on the table. For me, even if the statistics favor going up, which because the statistics have no idea of context, I am not going to be leaning on the statistics. I'm only going to lean on the ones in alignment with the context. Now, that doesn't mean you can't. It's not about you in the sense of what you do. If you have an edge, you should definitely be doing it. That's the business of trading. For me, I kind of approach things a little differently. But there's not one way to trade. What it is what suits my personality, my mental state, and what time frame or fractal do I trade in. There are some traders that put a trade on and they go to lunch, take a nap, not literally, but figuratively. And there's other traders that are very active. I tend to be more active, but that's not saying that's a good way to do this. It just suits my psychology. So I always kind of reframe this, if you will, from sharing market mechanics. When you can understand how the market works, it operates the same way in all fractals and time frames. So there's not like, well, there's only one way, do what Tom does. No, absolutely not. Don't do what Tom does. Do what gives you a statistical edge that's in alignment. So think of the market not so much as time frames. Think of it as fractals. Time is just a measure, you know what time is. And what we tend to do is try to fit the market into a box of something structured. Trades can be structured. Time is not an element in interaction between participants. It is the interaction between the participants with the order flow, with structure or development of the context that allows us to have structured trades. Now, you can modify, adjust these any way you want. There's not, like I say, and I really mean this, there's not a right way to trade, but I think if you spend a little time, you'll figure out what doesn't work. The problem we have, and I just want to say this at the top of the stream, the problem we have as traders is everything works at times. So we can go down, and I think of them as dead-end alleys, trying to take something that has a random outcome that wins at time and make it better. I mean, it's common sense. Don't we want everything we do to get better? But that process may be a losing proposition over time, even though it does work at times. So we think if we make it better, it'll work more often. Isn't that logical? But that doesn't mean if the casinos had a game where they won 30%, 40% of the time, but lost the rest of the time, they would absolutely not play that game. You might be seeing a pattern that works 20%, 30%, whatever it is, pick one, and it's a guaranteed loser. If you understood market mechanics and also what it means to extract an edge, you would not take that trade. This is what the Trader Lab is built on. Understanding the business of trading, not the randomness trying to make something work that has no edge. And if you haven't watched my primer webinar, it's available to all of you in the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. I suggest you start with that. There's no cost to visit Trader Lab. So let's look at this. We're opening lower outside of yesterday's range. Now, I want to give you a couple statistics, but remember, the statistics are skewed to the upside. So how do you operate with that? Well, I look at the condition of the market, and it gives me a couple of things to ponder. One of them, and I want to show you some of this, this is a high probability statistic. Now, not statistic, let me put it this way, target. The next target that is high probability, and it doesn't mean today or ever or never, is this is a target. The 43-ish area. There's no precision with this. This is what we call horseshoes and hand grenades. And then the next target under here, which is really more of a primary target, is in this area. Whoop, hold on a second. 30, where am I here? Here. This is microcomposite VPOC. Got it labeled wrong. Don't hold it against me. So 24 and 32 are on the hit parade here as potential targets, and these are higher time frame targets. Also, the first hour's low has a high probability, And again, you have to vet any statistics, but also you got to figure out how to use them. There's almost a 98% probability we'll take out the first hour's high or low. Now, statistically, it favors the first hour's high. This is where you need to understand how do you prioritize your inputs? I have a statistic that says I'll take out the first hour's high, probabilistically. But these statistics are not aware of the context. That's where context is number one. So for me, so overnight low targets, IB low target, this, and then 32. And these are all posted in TraderLab in the morning. And of course, everything is random. And now, what do? So there's a couple possibilities, right? This is the RTH open. And by the way, if you have questions, please post them in YouTube in the Bookmap Discord TraderLab. I can't see the questions initially. My mic is cutting in and out. Is it just me, or is there a problem here? I'm hearing that in YouTube. How about YouTube? YouTube? Are you guys hearing me in YouTube okay? Okay, thanks. All right, thanks. Okay, now we are in short positions here, not a recommendation, and that's the only thing I've done all day today is short. I have no longs, never saw a long, wouldn't take a long. Doesn't mean they don't work, but my plan is, which way is the market going? If the market is long, remember, sell stops under the market. Do I want to join the buyers, or do I want to use the buyers to get long, to get in alignment with the direction of the market and where the vulnerability is? In other words, the fuel. I talk about this incessantly in TraderLab. And traders who do not understand how to prioritize their inputs potentially are going to be fading the trend. And that's like falling over, well, I don't want to say pennies, when the opportunity for dollars is to go with the dominant side. If you're not trading, now I'm not saying if you're a scalper that you can't be long, short, but where do you think the bigger rotations will be? So this is the RTH open. Let's look. So we know everybody is under the bus, potentially. So, and we know we have the ETH low as our first target. So I know if I open outside, that I'm going for this. Now, the problem, of course, is where do you get short? So let's look. Sellers here, that's the iceberg absorbed. I'm going to show you order flow while we're at this too. Hold on one second. I got to make sure everything is still functioning here. Okay. This is called VPOC migration. What this is saying, all it says, and this moves around during the developing time frame. So this is all the volume coming in for the day, and this is only going to show me what's on the chart. This is the delta, which is represented by the bubbles. The bubbles are the aggressors, and aggressors are buyers and buy stops. They all become whatever's a market order, right? And then we're going to see stops and iceberg, selling iceberg, buying iceberg. Now you got it. So let's watch. So I'm looking at this and I'm going, well, I want to get short to go for this. So let's watch. What do I see here? I see if the volume is moving higher, I'm not seeing, I see this seller. I have a buyer here. I got nothing going on here. I rotate. I have a seller here. Right here, I get VPOC migration. This is suggesting higher. I'm going, really? Isn't that interesting? Let's look. I see a selling iceberg here. I have high volume here, and I'm thinking I'm going to try to get short, and of course, I have to get through this, and I'm trying to get here. I'm going to Okay, I want to know. This is where I'm going for. Why? 98% probability that I take either the first hour's high or low, and I don't know about you. I think low makes sense. Does that make sense to you? Thanks, Cisco. Okay, let's watch. So I'm looking. So, and this is what here's what I'm watching. Let me show you. These are microstructures, and I will show you triggers. I'm going to get into it. I'm going to try to get into as much as I can. There's so much today. When you get volatility, you get a lot of rotations. Like look at this stuff, So we're going to trying to remember where my first short was. Oh, it was here. Here's what's happening right here. And this is a Priceline add-on, and it's in the marketplace. To me, it's a terrific tool. This is the full session VWAP, okay? Now, there's something else I got to show you up here, by the way. Just so you know, I got to show this one to you. Where is it? Here. This is the overnight volume point of control. It has about an 82% probability we're going to get there. So what I'm doing is I'm looking at this and I'm going, well, I know I can come up here and that would be a great short because in the ETH, and there it is there, it resets at RTH open. That's why we're down there. This was where the highest volume was. The market really operates on volume. And every time you get a consolidation in any time frame, and this is for the whole ETH, or you get it in a fractal, this little chop, it's all the same. It's a auction. And the auction is really a check of what's too high, what's too low. Now, the joy, of course, of trading is what is it? Of course. So I know if I do anything in here that I have this 82% probability above me. So, of course, not thrilled. So let's look at microstructure. Now, I took some stops this morning, and I'm perfectly okay with that. I've kind of got past the point of needing to be right, though I prefer it. I'm a little bit more into needing to take my trades and accept the random outcome because I have this. Remember, I have this. So I am going for that. So right here, I have my buyer. I have no buyer above. I have high volume developing right there, microstructure. So this micro high volume right here in the microstructure is an area for me to observe. If I can break below it and come back to it, I might have a short. So let's look at it. I don't remember if I took a trade here or not. I can't tell you how many I already took, but you would probably be nauseous. So right here, so let's look at what we see. This buyer is absorbed. I break low. I come back to the high volume. This is my trigger for an entry. I see my seller here. Right here, I'm looking for it to break off. It breaks up. And I'm going, wow, that was close. So nothing. Watch. Still hanging in here. I'm watching this high volume. Now, guys, I'm taking you into something that might be too much. You know what I mean? By that, I'm saying is this is what I discuss often here in the stream. It's triggers. So I don't have a trigger here. So I'm going, all right, that was lovely. So I don't have anything at the VWAP. Okay. I break high, I pull back. This is now support. No longs for me. This is the highest volume in the developing daily time frame. So this is setting up there's two contexts being set up here. One is the context is down. This is a counter rotation. I'm cheering for my short, by the way, here. But annoying. I'm going for 32. It's not a trade recommendation. So this here is too low. I'm getting my buyers and I'm watching wherever it is, up here. Okay. So I'm aware of that. And I also know I don't have to get to it. VPOC migration. So right here, I break below this. There's a high volume node. So I'm looking at this. I'm saying this is a short. So right here, I put a short on my stop is here. Just letting you know. I got stopped out. Okay. I took a stop. And I'm going, never mind what I'm going. I can't repeat it here. So now I'm coming up and I'm going, going, all right. So I get a stop sweep here. I have another high volume area. So I am again stalking another short. Now this might, I'm not saying you should do this. I'm only sharing what I do. I'm not saying it's good. In fact, there are moments when I go, boy, what are you doing? So the buyers are still in here. I'm going, okay. This is a trade, though, I take. It moves up. If it's too high, this is my scale. So I was taking this to here and then to the overnight low. That was the trade. Okay, trade failed. No big deal. Now, let's look again. Right here. Now, right here, I'm looking again. And I'm going, because I'm trying to get here. So I know if I can get short, this is where I'm going. Mid, VWAP, here. Because this is called mean reversion. This is context inside of context. So let's look at this. So right here, chop, chop, chop. And it's just chopping. I'm seeing my buyers here. I see a buyer here. My seller breaks below this volume. These buyers, and I don't know this, at the time, these buyers were absorbed. What I want to see now is a retracement there. Let's see if we actually get it. That's a short, and I'm going for this. Mean reversion. I get VPOC migration. Teeth chatter. This is a problem. This is my target. I have to be, and it was the mid, the VWAP. So right in here is my scale. I was initially going for this shifts, so I get a little more conservative, and I'm going for the overnight low. Just telling you to trade. Okay. So you could see this, and then I get it taken out. So that, basically what happens to me is I scratch or, get a few hamburgers. It's about as deep as that. I come up again. Let me show you this one. Now I'm starting to get, I'll tell you, I'm starting to get a little more conservative in the sense of, I'm saying is maybe I got to wait. That's exactly what's going through my head. So let me show you. So this to me is a fine trade. This is okay. Didn't work, no problem. VPOC migration. And this was, I forget where I'm going here. Oh, wasn't it? Yeah, I'm confused. I lost my place. We come up here, and I want to show you this. Now, I get the chop, chop, chop thing going, and I have my buyers here. And I'm going, well, and now I'm kind of and I'm moving up towards that overnight VPOC, and I'm saying, maybe you're getting a little too aggressive here. It's self-talk, but I just kind of follow my trades. I can talk to myself, but when I'm hearing that, I'm saying is that what I'm supposed to be doing? Trading about this voice in my head, or am I supposed to be trying to get to the overnight low? Right here, I have a stop sweep. I see an iceberg. Here's something that I talk about in the stream all the time. So right here, I don't know. I'm seeing here's micro volume. I get a buyer. I get a seller. No bueno. I get a buyer. What do I have here? 30, and now one buy stop. I'm sorry, 66, and then 1. So I'm going, well, that's interesting. I come down. I'm below these sellers. I'm thinking this is good. I see more sellers here. I'm thinking let's go. I see the buyers come back, and I'm going, oh, crumb. That's not exactly what I say. I see again, I see stop divergence. So I got only 2 stops, and I got buyers here. So I'm looking at this, and of course I'm going, what's happening? So I have micro high volume here. Not actionable for me. It's a suspect because I've got these buyers here. Now, I won't know what's happening here until hindsight. So I'm thinking, well, we're going to keep going up to that overnight volume point of control. But I always am narrating and watching. So here's my high volume. You can see it there, and you can see it here. But right now it is here and here, okay? So I'm looking at this, and, and at the time I have no clue. So, but what this represents is a consolidation. And the market does the following things with consolidations. They basically break out. So if this retail price, which is kind of like a shopping experience, if this is too low, we break high. If it's too high, we break low, and then we can come back and check it, and that sets up a short. It's a trigger in the Trader Lab. Let's look at it. Here is the trigger. There's the seller. So now I'm going, well, that's nice. This is the high volume here and there, right? In fact, I'm going to draw a little line so you can kind of see this. And I always recommend to traders in Trader Lab that you narrate the market and draw these little lines. Now, you're going to ask me, why would I be drawing lines? Because it'll teach you unconscious competence. You'll start reading. This is a language. Now, I don't use indicators, and I want to stress that because indicators lag and create conflict. I can get, conflict, sure, but my indicator is not going to be timely. So when I see this, I know I have a short. Depending on the structure, I could be selling it here or waiting for it to come back to the volume. Let's look and see the retracement. This is a structured trade in Trader Lab. This is a short. This is the scale. This is the volume point of control. So this is called mean reversion. And I like to stress, yeah, it's mean. It's the same thing that was going on over here. Same trade. I'm just at a different location. And then I'm going there for my scale, and then I have a helmet on. Is everybody with me? It's just trading, guys. And there's my target. Okay? Is everybody with me? That's the first trade. Hector, thanks for the question. The high volume nodes, you can see them on the profile. If you look here, that's high volume. So when you have a consolidation, which is a chop, chop, that's what this thing is. Chop, chop, chop. When you break, now I try to enter with an electron microscope. And I'm not saying and that's only because I've had practice, intentional practice. And I don't want to enter here because of, quote, not being sure. I'm just as unsure here or here. But I know these are triggering structures. And by the way, everyone, if you're in YouTube, all of this is available at no cost. You can download 60 PDFs of these behaviors. Now, it is not plug and play. I know we all want a red light, green light, and then we go down the basement at the end of the day and we just take the cash out of the ATM. I understand. Wouldn't we all like that? Doesn't work that way. Otherwise, all the retail traders who fail, who are doing the same thing, would be successful. And the key, at least in Trader Lab, is to help you build a business of sustainability. In other words, you're in the business. You create a career. Doesn't mean you'll succeed because you got to roll your sleeves up and make a commitment to education and the frustration that goes with not getting it. We all go through that. Except in Trader Lab, you might shorten the learning curve and be in a supportive community versus being under a rock somewhere. This is a distribution, a consolidation. When it breaks here, it comes back. And what it's doing is, let me take this a little bit further. Do you see this here? This is a distribution, okay? And this is the highest volume so far in the developing daily time frame. This is the same thing up here, but it's a fractal, so it's the same behavior, generic. So when I mention trading in fractals, if this becomes too high, and nobody knows, I mean, we could just do this, give a little head fake, squeeze through, and come up here. I accept that as a trader because I have no clue. And write that down. Clueless, random, casinos, cards coming out of the decks, random, and how the gamblers play the cards, random. So it's about edge, not about the next hand or what happens. It's about, am I playing the game correctly based on my plan? So this is a short, and what it's showing us here is if I don't come back over this and this, it's too high in this auction, and then the next place it was too low was here. So it's like support and resistance in a different way to think of it. You know, I think of it as volume because the auction is about, is this price fair? Think of it like going to a small store Saturday night, and there's a pint of ice cream in there, and there's buyers and sellers in here. And this pint of ice cream is priced pretty high, but you want ice cream, you're going to pay for it. So we get buyers. But if overall the price is unfair, the shoppers or the participants are going to leave the store and return to the last price that was fair. So that's why if this is too high, this is where the scale is in case this is too low. Now the trend is down, and I have that statistic open at the overnight low. So that's why I'm taking the short. Same reason I took a short wherever it was. I think it was here. Wherever it was. I can't remember. Or maybe it was over here. But you could see the shorts, see, going for here. That was the last short. Had this. This could be a short also, coming to here. It's the same trade from different locations called mean reversion. And remember, and this is not a recommendation, my targets, and these are all posted early this morning, are 24 and 32 down below. And that's not a recommendation. So that's the short. I hope that makes sense. Now let's continue. Mike, did I answer that question for you? And by the way, if you're in YouTube, please give a thumb up. So this is the target. Now, at 9 a.m. Central Time, we have something called the IB30. We also have a statistic that called the IB stat, and at the top of the stream, I mentioned some of these. Now, the trend is down. So for me, my next target is that IB low, and there's about a 98% probability of taking out the first hour's high or low. Well, considering we couldn't get to the overnight volume point of control, which has an 82% probability, which was where my teeth were chattering because I'm taking these shorts. And by the way, if I'm taking shorts and they're not working, and I'm taking stops and hopefully getting scaled, and sometimes I do, sometimes I don't, and my broker sends me a gift basket because it's good for the broker, and that's fine. This was my outside target. This is a short also for me. So, but I know this might be, based on the context, too high. So that's all I know. I don't know anything else. And I know I have this and I have this for high probability. So for me, I don't have any longs. I'm just trading short. So let's look. Now we have another trade. Now this is subject to your plan. Let's talk about what's going on here. This right here is the volume point of control at the time. I'm going to label it. It's called, and I make up these things. When I first started doing this, nobody was doing it like this. So I didn't know what to do. So I made up things. Variable high volume node, and it's variable because it's moving around. There's also one right there. You can see it. It says HVN. I'm going to label it. And let's talk about the language of the market. Now, I don't use indicators. How do I do this? Well, I look at it as a language of participant behavior, and all your indicators are doing are attempting to interpret language. That's all it is. It's a translator. The problem with an indicator is it doesn't know if it's coming or going, and it's not necessarily aligned with context. It might be at times, and it might not be, but they lag, and depending on your inputs, they might conflict. If you use them, you know what I'm talking about. And if they work for you, that's great too. Mine always work for me, sometimes. And the problem was they didn't work for me enough over a large sample size. And then I would tune them, tweak them, curve fitting, and I've talked about this indefinitely about my work with trading systems, because I used to manage, funds. So I was across a lot of asset classes. So I actually tried to systematize it. I also tried to overcome my emotional attachment and fear. So I thought if the computer did it, it would remove it. So I had a lot of motivation because I'm normal. No, not normal. Human. And I'm triggered emotionally like you guys are. Let's look at the micro. Chop, chop, microstructure. Break low. What's this? Micro. I'm going down in a fractal for you to see it. Let me just throw a line on here. I just want you to see auction. And I'm going to move on real fast here. But you see this? Chop, 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 chop. There's the volume. See how it breaks and comes back? So for trade management, and this is just up to you, here's what I've got. Too high, break away from it. This was the scale. Come down, break out of this thing. Chop, 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 chop. What's this? An auction. Chop, chop, chop. Same as that. Chop, chop, chop. You see it? Bing, 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 bing. I'm not paying that. I'm leaving. Now we pause. Chop, 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 chop. What do I have? Sellers here. Auction. Buyer, seller. It's a consolidation. What happens? I break low. There's my high volume, and it's the white line. I pull back. Now, subject to your time frame, this is another short, or not, or a trade management opportunity. This is a short trigger. It's not a trade unless it's vetted and in your plan. I just want you to know. Come down. This is the target. So what I do is I trade the targets. And then we come down here. Now, I saw something. I'm trying to remember where it was. Icebergs. I'm trying to remember where. There was a huge, and I don't remember where it was. I was watching these icebergs execute, and I was getting very annoyed because it really interfered with my trade. So we pull back, and where am I? Let's come back. High volume, VWAP, high volume, VHVN. This is another structured trade right here. So I get this and I see these guys and I'm going, what? You ever do that? What? However, at 9:30, which is right here, this is locked in, the IB. And remember this statistic. IB high or IB low, past performance not indicative of future results. When you open a lower outside of range, there's almost a 98% probability you're going to take one of them out. Well, for me, I'm going there. This is my next target below it, and then I've got one at 32 and one at 24. Write those down. Not recommendation. This sets up another short for me. I am leaning against this, and that. This is called Confluence. These are high volume. Here, this is a high volume area right there. And right there, this was retail. I shift up. This is the new high volume area. This is a micro high volume area. That's my scale. This is my next obstacle. I break below it. Watch. Down I go. Having a great time. Let's get the champagne on ice. I get this thing and I'm going, oh, that's nice. Now, I'm not going to go too much in trade management because that's fractal. In other words, you could be short with a stop up here and go to take a nap, or you could be more active in your management. So I'm just going to say, for me, I might cover right here and then put it back out again. But this is my fractal. So I trade rotations. I mean, look at the size of these things. Now you're going like 50, this is 10-point rotation. So for me, if I'm short from here and I'm managing here or added here, I'm not saying that about anything about that. I just want you to see structure, and it's going to zero. I see icebergs, sell stops, looking great. Let's look. And right here, I'm going to take you back to microstructure. I'm just going to show you one way to think about this. Here's buyers selling iceberg. They are absorbed. Now I'm going to take you more into micro. Here is micro high volume. There's my seller. This is resistance, depending how you define it. I have a buyer here. I break low. I'm under this volume, which is there. I want you to know I am in electron microscope world. Here's my buyer. They are absorbed. Iceberg on the other side. This is why the stop and iceberg detector is, I think, a great tool. Hold on. Are you guys getting something out of this? Do you want me to speed along, or is this useful? Please give a thumb up in YouTube. So, IB low. So don't forget 930, 98% probability. So now here's my trade management. Again, not a recommendation, because this might be the worst trade management that has ever been considered by anybody. But I'm going to tell you why I do it this way. Because if this thing comes all the way back and I give up 10 points, Tom is not going to be a happy camper. I'm going to have an emotional response to it. You know, regret, and then FOMO gets triggered and the lunatic comes out of the cage. Hide. So in order to guard against hide, I manage my trade, and it does cost me at times. For example, I might get just popped out, and then it just gives a little rotation and does the Acapulco cliff dive, and I just accept it. So let's watch. Too high, break low, too high. Buyers absorbed. I know right here is my resistance. I get taken out. Okay, so fine. But what else do I know? 930, this is on the list. 98%-ish probability. Now I'm looking for another short. Now remember, this was too high. And let's remember, you got mid, you got VWAP up here, and stops are up in this area. So let's go take a look. And let me know if you have questions. Now we come back up here. What else is up here? Let's just look. Variable high volume node. It was too high. The volume point of control is up here. I can come here and I can come here. So I know, let me tell you what I know. This was a selling trigger. If I come above it, I'm squeezing, and then I have to come and look at my next high volume area, which is up here. There's also another possibility, just to keep you crazy. This is what we leaned on for the short, or a short, if you wanted to take it. This is an outside edge of this volume here, just saying, and I can squeeze. Where's the stops? Mid and VWAP. What did I do here? This was a short. The possibility is to come up. So let's see what we get. This sets up a short. There's the high volume. Now, you could take it here. I don't think I got this one. I don't remember. I can't tell. I'm going to have to look at my book. This is a trigger. Let's look at it. Now, remember what's in alignment here. This, and there's stops above here, right? So when I'm thinking, I know here is the volume and there's stops here. If I come back here, where else are the stops? Mid VWAP. And I have a variable high volume node here. So what I have is my VPOC here, my variable high volume node, and I had broken below it. If I come back, and this is my outside edge of this distribution, might not be your trade. Let's look at it. I come up here, I take stops, I have my buyers here. So right here, I think it's, because this is where it could come here too. I have this, and I have that. Those are my areas. And I don't know what will happen. I only know what might happen. I trade levels, and I also think about where the stops are, and they're over swings, because that's what we do. We retail traders. What I don't know is where. So I just narrate. Was it here? There's a seller. I come back here. There's a buyer. But I have my stops above this swing. You see, I think of that. I look at it, and that's kind of what I do, because I don't want to jump in here. I want to come outside. And at 9:30, don't forget, I have that first hour's low, IB low open, and that's over 90%, 98% probability at some point we take the thing out. So this sets up a short. Let's look at it. Now, I'm kind of right here. I'm very mixed about it. So I'm reading the order flow. So I'm coming up. I see my buyers. Right now, right here, it looks like it's just going to keep going, because I can't tell. I mean, it's just not my thing. But let's remember what was here. Let's go back. This was too high. This was too high. I come back. I can lean on this, and I can look for these guys to get whacked. I come up. I'm looking for this and that. Okay? Two locations, and out here. Low volume node, because I could just come out here and then come back. So that's what I'm looking for. It's still mean reversion. I am only taking shorts, and I'm trying to trade outside in trading. This is mean reversion. The joke in the Trader Lab is, yeah, it's mean. So, but I don't know right here. So let's look. Right here, I see my buyers, and it's a suspect. It's like, oh, there's my seller. Now in here, with alignment, I have volume. I break. So right here, it's a suspect. Right here, it's all right. Pull back to here. Let me try to. So you got volume there. You got volume here. This is microstructure. You got to understand this, and this is drills. What you do on replay, you just work to understand and recognize this. I'm going to draw a little box around it. And all this is not complicated. It's random, but it's certainly not complicated. I mean, so what you got here is chop, chop, chop. I break low. So I'm below this buyer. That is a trigger. So you could see it right up here. Oh, it's going to the moon. It's going to the moon. It's going to the moon. These guys were absorbed. Now, I don't know that until this. And even then, I don't know. I pull back here. Subject to your skill, this is a short with a stop over here. If you're waiting, there's the sellers again. It pulls back here. This is a short in here or here. Stop is over there. It's just a matter of, can you execute here? Takes practice. Or you execute here. Stop is here. To me, that's palatable. And then you're going for your high volume node below. And the IB. So you're going for this. And look where we come back. And this will make you want to throw up your breakfast. High volume is here, here, here. Let's put a little line on this thing for you. Here, let me bring it over here. Let me know if you want me to do something else, guys. I'm in fractals now. So I have my buyers here. Now let's go back to Bookmap. Buy stops come out up here. This is my high volume area, and I have no clue. It's a counter rotation. I am going for the first hour's low. What do I get here? It's going, who knows? Right here, I see my buyers. I see a seller. Now I'm clueless, and I can prove it. Right there. So here's what it looks like. It's developing. I don't have any idea. You know, there it is. I don't know. I got that. I see a seller. Now I got a suspect. The micro high volume is right there, and you see the delta. These are the buyers. Same thing you see here. You see the buyers. So we got longs. By the way, are they buying or is it buy stops, you ask? I ask the same question. Do you really want to be long? Up to you. Me, not so much. So, but I don't know where this will exhaust. But look at microstructure. Micro high volume, seller here. Break high. This guy is underwater. Buyer, 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 seller. For all I know, it's going to give a little pause and keep going. Let's watch it. I see my little volume here. Now, this is nothing for me to do. I'm watching it. I come up here. I see no buyer. I also see, let me try to do this, 76 buy stops, only 12. So what that is doing is it's showing me something I call stop divergence. So I've got a piece. And to me, this looks like the middle of nowhere. And maybe it is. So it might not be in your plan. I get my seller. Now, I still am clueless. Watch. There now is my volume. Nothing up here. There's my seller. Let's mark it. And you could see it here and here. Okay? So I'm going to put a little line on here. And I think with practice, everybody can kind of learn to do this. So it's there. I'm going to put another one on because there's two of them. And what I'm doing continually is narrating. So this one has micro high volume. It's that right there. And then this is the volume in this. I'm going to draw a little box now so you can kind of see the structure. This is all about structure. No, I don't use an indicator. So what's my indicator? It is participant behavior. That's it. No way, no nothing, nada. So let's see what it does. This is the trigger. Think of how it's a story. These guys interacted and they said, I don't want to pay this. I had no buyers up here. These guys were absorbed. Now, you don't know that until we break away. Now, this is where the volume is. So there's a couple ways you can do this. I think the more conservative way to do this is to have the discipline to sell it on a retracement so you could have your risk really tight. And you're going to take stops, so we can't avoid that. No buyer, no buyer. These guys here were absorbed. There's their delta. Okay, now you don't know. We could just as well blow them out. So that's just a trade, you know. It's just the way, as they say, the proverbial cookie crumbles. And then the high volume. When I look at, because there's high volume, I'm looking at the volume in Microstructure, and I use them for scaling, you know, and trade management. It's just something I do, and other things. But let's watch. See the symmetry? So I know this is too high. I know one of these could be a scale. My stop stays here or here. Remember, this is another short right here. So you could keep your stop above this, get risk neutral. If you see this, you could cover subject to time frame. We come back here. I see the exhaustion. These guys were absorbed. The sellers are here. Down you go again. So that's a short. Stop is here, or you're out here, or you're taken out here. You put it back out here, and you're going for this IB low. That's where I was going. And there was something going on down. Oh yeah, this. I got to tell you, this really, how do they say? Twisted by shorts. I'm watching this. Now I'm trying to go here, you know. So I'm over here and I'm going, great, you know, short, you know. And I have this 98% probability that starts, that locks in at 9:30 Central Time, my time. So, but here's what I see. I see this iceberg executing here. If you're in Trader Lab, do you guys see that iceberg? Yeah, Rod's talking about purse snatching. I kind of think of it myself like I'm Rod's in Trader Lab. Um, Guys, the thing about trading is you really need to kind of dance with the market. The market is not rigid, it is fluid. And we don't know when it comes to rotations, we have no clue. So if we are in a random environment of rotations, what do? Do you just put a trade on here and forget about it? Well, if it has an edge, I guess you do. I can't do that. So what I do is I put a trade on, I have levels. If I see behavior that's counter to my trade, I may just get out of it. If I see this, I can sell it here and I can put my stop back up here. And then I'm rotating back down again, scale and holding. That's just what I do. And it's not a recommendation. It might be the poorest way to trade on the planet. And it makes for a lot of activity. That's why I keep getting these fruit baskets from my broker. But when I catch the trade, I'm still going for this. But here's what I saw. These icebergs were executing here. So I'm watching this iceberg and it's just racking them up. And I'm going, come on, man. And I'm really saying, I'm actually having this conversation with the screen, you know, come on. Because what I need to happen is these sellers who absorb these buyers, which is this iceberg that's executing here, just absorbing all these sellers in here. Okay. So what I need to happen is that we break below this guy. Instead, I get this. So right there, my short took me out of the trade. Just telling you. Now, and I was very disappointed emotionally. I mean, it doesn't have nothing to do with trading. It's how I feel. And the way I feel has nothing to do with anything. Here's my volume point of control. It shifts down. So this is saying everything above is too high. Let's look at the microstructure was here also. See this? Chop, 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 break low, test. This is a trade management structure. I didn't, but you can see it, right? I'm not going to keep adding the lines. So as I'm coming down, chop, 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 break low, trade management structure. Chop, 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 iceberg, get out of my way, iceberg. Chop, 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 high volume. Break. I was taken out of the trade here. And of course, there's a lot of words being spoken that are not nice. So here we get VPOC migration. This is another short in the Trader Lab. So right here, I get my chop, I break, and I took this short. I put my stop here, and now I'm working towards this. Just telling you, life of the now, right here, I get VPOC migration. I'm now going, this is great news. Continuation down. Now, there's two things that can happen. You can get this kind of thing where it gives you a continuation. This is, I made these terms up, VPOC migration. It is a structured trade. If it fits, and you know, you have to have the range you have to qualify it for your trade. In other words, it might not be your trade because the low of the day is right here at the time. So this is a aggressive trade, but I have a statistic. So this is kind of my thinking. I'm going, well, if I can get risk neutral and we get VPOC migration. Now look at this thing. So right here, I'm looking for it to do that. And so there it is. This is my resistance. I get my test. The teeth are chattering. I'm looking for it to break down. It needs to break down from here. It crosses above. Right now, I'm going, oh, this is not good. So, and it's not good. So I break below. I'm going, okay, another 1,000 icebergs start going off. And I am going, let's just say, you wouldn't want to be sitting next to me because I saw what happened the last time this guy absorbed. We got that. So, and I know this was too high. So I've got the same guy, really, I assume, because it's more execution. You're looking at the icebergs, 3,000, 4,000, that's a big number. So the word is prayer at times that this guy will finish and then we can continue on. My stop is here, and I'm assuming the trade is done. I'm saying, I'm just going to take a stop, and that's because this is the most important high volume area here. So I'm looking for this. I'm seeing this. I'm going, this is a real pain. And you know what? I'm going to get stopped out. I'm disciplined. I leave my stop. And because I'm thinking all we're seeing is iceberg buying, which is disrupting the auction. And I have this 98% probability. So that's why I'm holding the trade. And, and I get taken out. Okay? The way it goes. So I get taken out. Now I did get this trade. Here you go. I come back up here and I get my selling icebergs. I squeeze this out. Let's look at the trade again. Now, this might not be your thing. This might be just like you're out of your mind. You're trading like this. I'm going to say, well, yeah, I'm out of my mind. And yes, I do trade like this because I'm trying not to take large risk. I am trying to get risk neutral and I'm trying not to give too much back. And this is what happens. And by the way, this is the reaction off that iceberg again. Don't ask me why. Not my thing. I have no idea. Remember our targets? I'm just looking over at my trading platform, 32.5 and 24-ish, not a recommendation. Remember, these are all on the price map. 24, and this should say 32.5. Actually, it is 32.5, but it's a micro composite volume point of control, mislabeled. Same difference. So, and these are all on the price map. Everybody knows this in TraderLab. And it doesn't, all it is a guide. And these levels are created by the participants. There's no Fibonacci, no nada. It doesn't matter. At least to me, been there, done that. And what is that all about? Random behavior. Sometimes it works, sometimes it doesn't. I don't want sometimes. Anything that creates conflict creates paralysis by analysis. Have you heard that term? Variable high volume node. This is too high. This is the retail price. Okay. I know this is too high. It doesn't mean it won't go all the way up and, the low of the day isn't. Let's watch the structure. I have a high volume area here, right here. I have a buyer here. So going up, 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 up. No buyer. I see my seller. I got no buyer. I got my volume here. Right there. So it's in alignment. And there's no precision in this thing. There's my seller. Now, I got to find a way into this thing. Somehow I got into it. I don't remember how. Oh, there you go. See, this is a short. I took this and I'm going for this thing. There, target. Okay, that's my last trade, regretfully. And what do you see? Let's look. What do you see? Short, short. All these are shorts. Watch. Short. This is a IB continuation trade. It's a structured trade. Short. Retracement. This was your short. This is a short. Target is, as I said, there. Any questions, guys? Sorry for taking so long. Is here 32.5. Remember, top of the stream, 24. Not trade recommendations. I'm coming up for oxygen. How we doing, guys? How we doing in YouTube? By the way, if you're in YouTube and you find this interesting, I invite you all to come to the Bookmap Discord Trader Lab community. It's a no-cost trader community. It's not based on action or a video game. This is about building businesses. So it might not be your thing. I know there's a lot of folks who come into this and they think they're playing Flight Simulator or they're shooting the Martians. That's not what the business is. If you're interested in the business of trading, you would already know what you would do. Not where it'll happen, but you have structured trades. This is the whole point of the Trader Lab. You know what you will do before it happens. Then you are waiting for it to show up, right? I wish, I was on these, but what are you going to do? Here, let me, I'm going to try to scroll back to this morning in the Trader Lab. I just want to see some stuff. I want to show you some stuff as far as levels and when they were posted. If you don't have this, I think you might, well, it depends on your results, 7, wow, where is it? Here you go. Let me just go a little further there. Here. I posted this at 6:56 a.m. And this is not to prove anything. This is about understanding market mechanics and not being able to predict anything. We're not in the prediction business. So this is at 6, whatever it is. And I'm having a conversation and I interact with our users. This is a team effort. Nobody has a monopoly on anything here. The reason the Trader Lab exists for traders is so we can come together and leverage our collective experience to do something better, something unique. I've got almost 45 years of doing this, both professionally and now as just like you, sitting out here as a retail traders. Here's the levels. 56.55 micro composite low volume node. Let me move this over so we could see. This was a target. It's on the chart right there. Okay. 56.43, a high volume area. 56.32, a microcomposite volume point of control. These are higher time frame, intermediate time frame levels. That's this, and this is a target coming down. And then we have one more under here, 24 someplace, wherever it went. 24. Doesn't mean it won't go lower. It can do anything. Trend configuration. Okay, so I'm just talking, and here's what the news and all kinds of, and look at all this interaction in the Trader Lab. A lot of discussions. And the idea of Trader Lab is we put our ego aside. We all make errors. We are all trying to get better. If you want to look good, you're in the wrong business. You got to throw that away, in my opinion. You need to just accept this is difficult and everybody has an issue and makes mistakes. And I think the bigger issue is I believe anybody can learn to trade, whether it's Trader Lab or some kind of credible process, not nonsense. And if you can learn to trade, that means you got to put the work in. Then it's a matter of emotions, emotional management. And you may think that the next setup and the next best secret sauce is the answer. It absolutely is not, in my opinion. The answer lies in being in a community where you got the real deal. Now, this might not be your thing. There's no such thing as one way to do this. But based on what retail traders do, which is matching timeframes indicators, I think with the failure rate being what it is, that might not be a sustainable process, even though the problem we have is it works at times, but it doesn't have an edge, maybe, unless you have one. And by the way, if you do come to Trader Lab, the idea of Trader Lab is our senior trader has over 50 years. We have newer traders and everything in between. I'm going on 45 years. So, and the time in doesn't mean anything more than I've probably had more time to go down more dead ends than you have. So the things you think are aha, then they're done it. And that might save you some time because none of us have unlimited time and unlimited resources, right? So that's what the Trader Lab is. And it's the leverage of the collective community that makes us all better. Statistics, interaction, debate, screenshots, and many different time frames as far as how we operate. So for me, I have no problem with this, except I'm not on it right now because I'm here with you guys. That's the only issue I have. And that's pretty expensive, I think. So that's something I always am thinking about, and I have conflict, but that's not your issue, it's mine. Any questions here? And there's a link in the bottom of YouTube. If you're getting something out of this, if this is opening your eyes to possibilities, if this is not the way you relate to the market, and you're not getting the results. If the Magic 8-Ball gave the results, and by the way, we had one on the trade desk, the best it would ever say that actually worked was ask again. You ever have one of those Magic 8-Balls? So, and it was kind of a joke. The rule on the desk was you don't throw the Magic 8-Ball at somebody or a monitor. And you do not throw monitors out the window or keyboards. And we did have extra keyboards for the times where somebody starts beating the keyboard on the desk. And if you haven't seen that, you don't understand emotional states and frustration and anger and the lunacy. And that's when somebody got sent home. Back tomorrow. You're not in the right mind frame. Notice the iceberg's mind. So anyway, 32 next target. And that's not a recommendation. 32.5, by the way. And if you understand how the market works, market mechanics, why it does what it does, and also how you might get in alignment with it at times, and we all take stops to protect our account, you may have an opportunity to create an edge that is statistically valid. The casinos only play games that have a statistical edge. They have no control over the cards coming out of the deck or how gamblers play the cards. So we don't have control over when an iceberg comes in, this thing, and disrupts things. Same. We don't have a control over getting our stops picked off. It happens. It's part of the random behavior. Since we have no control, we can only control what we do, not the outcome. And that is about trade plan, and that's what Trader Lab's about. You can use the link in the bottom, by the way, of YouTube if you want to come to Trader Lab. Say hi, and there's a library of webinars that are available exclusively to Bookmap Discord Trader Lab participants as well as the community. It's a global community, 24 hours, 7 days a week. And I am in there as much as I can when I'm not actually trading. I try not to interact. I'm not a great multitasker. This takes 100% concentration to read the nuance of the participants. Since I don't use indicators, I'm actually speaking a language. This is like learning to play music, learning to dance with the market, or a language. And you know how long it takes, right, to learn a language? It takes a little time, right? Well, this is the language of the market. So when you guys use indicators, and you have to understand, I'm not against indicators. What happens is, does the tail, the indicator, wag the dog, or is the dog wagging the tail? This is the dog. The indicator is following. When you get this, what are you doing? You know where resistance is based on order flow, which was right in here. Would you know that? The high volume structure. Would you know you could have your stop here if you chose? Or sell this if you're a scalper? I'm not saying you should. I'm just saying you could if you could develop an edge. Do you have that? Now, here's the thing about an indicator. If you understand this, could you overlay your favorite indicator du jour to help you versus getting long here, maybe only taking shorts because now you understand context, and you would be trading towards this. This is how Trader Lab operates. Now, I'm not saying and here's the beauty of Trader Lab. What's the right way? It's the way that gives you an edge. When you have a consistent process, not something that's impulse oriented and, I'm going to miss it and FOMO driven, you then can sit back and just play the games that have the edge and leave the gambling to somebody else. Does that make sense? Please give a thumb up in YouTube if you're getting something out of this. If you're interested in Trader Lab community, there's no cost. And this is something that's pretty interesting. How many of you guys have been in paid subscription chats with the latest guru or gyro, whatever they call them? I'm going to tell you the first thing. I am not one of those. I'm just like you. What I have is the experience of doing probably almost everything you've done. And when I started, it was 1980. There were no computers, no internet, nada, Zippo, and indicators were just coming in to the public or retail space. I shared an office with George Lane. He created stochastics. I'm telling you, I thought the Holy Grail, that was the Holy Grail. Look at this. It crosses over. It's going up. Every time it crosses over, I'm going to get long. Every time it does the other thing, I'm going to get short. And then we figured out, divergence. What does that all mean? This is where I started. And before that, classical bar charting, there were no candles. It was open, high, low, closed bars, So I'm just saying, and along the way, I got excited so many times, and I coined a term for it eventually called Trader Groundhog Day, where you see something, your mind recognizes patterns. We tend to look for patterns, and we have pattern recognition in our brain. So we think, this looks good. Look, it worked, over the last 3 months or 3 weeks, I would have made blank, blank, right? You've done it. I've done it. And then you set it up, and you tweak and tune, and now you're ready. And you take a stop. And then the next time it works. And then you say, I'm going to put it a little more, maybe move my trend line or whatever the heck. And off you go. And in the end, you're losing, even though you have intermittent winners. That's the problem. The random nature and the curve fitting to try to fix something that maybe is a defective process. We believe it works because it's random, and we believe all we got to do is make it better. Isn't that logical? Is that what you think? Well, that's what I thought. That's my experience. And what I found, and I call it Trader Groundhog Day. I did a webinar on it because I can't tell you over how many years I would get excited, thought I was doing it better. Got to watch this behavior. Only for a rotation at the moment. And it doesn't mean, by the way, the market doesn't have to get here. It doesn't have to do anything. This is the joy of trading. It may never get there. So we have this, and this actually as targets. This, I don't remember. I have to check. I don't trade from this platform. This is my streaming. But I hope that makes sense. Please give a thumb up in YouTube. I hope you get something out of this. And I hope you guys will visit Trader Lab if you're not getting the results you're looking for. The Trader Lab is a no-cost community. And here's the other part. If you're a Bookmap subscriber and you're interested in order flow, there is the Bookmap Academy. There's no cost for that. And it's coaching and mentoring. There's education, not only on order flow, but stocks, options by stocks, large cap, small cap, stocks, options, crypto, market maker behavior, options, swing trading, all kinds of stuff. And there's no cost for this in the Bookmap Discord server. What I invite you to do is come visit Trader Lab. Get your toe in the water. When you understand how the market works, and they're not mutually exclusive, if you understand how the market works, then you could use order flow So let's look out here. Let's just look and see what we got. This is an outside edge of a distribution. That's a high volume node. It's a potential short here. I'm not paying a lot of attention to it, and it's not a recommendation. I don't call trades. Let's watch it. So right here, you could see selling iceberg. Buyers were absorbed. There was a stop sweep right here. Your micro high volume is there. Let's see what it does. Not a trade recommendation. Now, this is scalpy, The outside edge is really kind of out here. And you have to be have your stuff together to operate in this fractal. I don't remember, top of the stream, I said I don't use the clock because this is the behavior, not, 5 minutes went by and I've got to sit here, watching the clock. Time is not what creates this. It's buyer and seller interaction. So we'll watch this. And this is really a very aggressive structure. So I'm not saying anybody should. In fact, I don't call trades because believe me, I pay to play, right? And I'm glad to do it. So I'm very active, and I'm not suggesting that. It just comes from a lot of time in and experience and being able to act quickly. This is why the broader strokes are better for developing traders, in my opinion, not to replicate this. But the thing is, if you can understand what creates it, then you can be anticipating the behavior. And it doesn't mean anything. And I'm not saying I'd be taking this trade. I want you to see the behavior. That's what's important here. So we know here we're buyers, and buyers are here, and there's a sweep. We know this is the high volume. The way I operate with this is if I see my seller, I'm looking here. And right now my buyers are here. So this is, if I can break below here, I could, give it some thought, if you will. So this is outside edge. It's right there, So if you can operate in this, I'm not saying, look at the and nobody enters here, Me, the knees start banging together. So I'd be short here with a stop here. I can handle that. And then, subject to what I'm trying to accomplish, all I need to do, the distance from my stop, from my entry, is my scale. And what do I know here? This is too low. I could be targeting this. And if I get taken out, I get taken out. I mean, that's just what happens. That's why these aren't trade recommendations. And I'm only showing you microstructure. But look at what you got. You see the reaction? So if you're trading in this time frame, you would take a stop. That's just the way it is. But the outside edge is out in here. So let's watch out here. And this is the IB low. A couple things to know. There's something called the IB continuation trade, which is a short. There's another HVN, and there's stops up here. Let me see if we've been up here since we broke below. That was a short there. Short was here. So there's stops here. So this is a dangerous place at the moment. But it's also, if we come up in here and we can't get traction, it sets up another short to test the low, and it's not a trade recommendation, and continue, down in here. Final questions, guys. I get about 5 minutes. Hope you get something out of this. One, the columns at the right, and here's our stops. There's 1,000 selling icebergs. Here's our location. Let's observe it, okay? Right here, whatever happens here is very important. High volume, right here, location, potential short, not a recommendation. Just watch it. Now, the thing is, the smarter play on this, if this is a short trigger, is to be looking for retracement and then see exhaustion. These guys were absorbed. That's what this is telling you, and that was a sweep. They went, remember, IB stops were up there. That's what I was anticipating. This is a good short for me. If I wasn't visiting with you, I'd be on this, and I'll take a stop proudly. Not happily, proudly. Let's watch it. And these are not trade recommendations. You might be allergic to these kinds of trades, which I would understand completely. These are aggressive, So I know out here was a seller, and I know there was absorption. So we want to watch the behavior on the retracement. So right here, if we come up above here, then this trade's probably got a problem. Let's see. Right here is very important. Buyers are there. I need to see these guys fail. That would be useful for the short. They don't fail, then we're going to squeeze. Let's watch. Please give a thumb up in YouTube if you're getting anything out of this. This is not a trade calling room. What I do is try to help traders understand market mechanics, how the market works, why it does what it does, how you might at times get in alignment with it with structured trades, and then order flow to help you with timing. And that trade would fail. We're still getting into these stops up here. And that's just the way it is, guys. Icebergs are on the other side. It's very interesting what's going on here. And they're sweeping the book. So I have nothing more for you at the moment. I'm not done on the short side personally, but at the moment now, since I'm above the IB, I believe, where am I? It must be covered up. I have to wait. This is possible now. So I've got nothing here. I'm just going to sit. That's me. And yeah, I would take a stop. And I'm perfectly okay with it. What I wanted to see at the IB, which I think is right over here, is this sweep, and then the break, and then the comeback. And then it needs to stay below. So if I put the trade on, I would take a stop, but my risk is something like this, And if I get skidded, I pay a little extra, and I don't have a problem with it. Now, taking stops is part of our business, It's over. Remember how the casinos deal with the gamblers. It's overhead and cost of production. You'll see me catch the big swings, and you see me, it's just my plan, try to waltz into these things with tight stops. I can afford to take a bunch of stops as long as I can position myself for these bigger rotations. That's what I try to do. Please give a thumb up in YouTube. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to review screenshots, circles, arrows. The thing about trading is you have to find your dance partner. What is your time frame or fractal? For me, this is a structured trade here. Trade failed. That's okay. Now, there's nothing here for me. Even if I rotate here, this is now the possible target. So this is it's really a mean reversion trade from the long side, which I will not take. Just me. Doesn't matter. Others will. So thanks again, guys. Please give that thumb up in YouTube. It helps the stream and it helps encourage the Trader Lab to keep doing its thing. Thanks, guys. Take care. Have a great day. And I look forward to seeing you guys tomorrow. And remember, trade with a plan. Over time, if you have an edge, that's how the dollars are extracted from the other participants. If you're interested in the business of trading with an edge, developing a trade plan, click the link in the bottom of YouTube. After you give a thumb up, visit the Trader Lab. I'd love to meet you. Take care, guys. Have a great evening.